Hey everyone, welcome back to Corporate Decoder. Today we're diving into a report from CommScope Holding Company, and trust me, it's juicier than it sounds. I know, it sounds like a company that makes cables, and well, it kinda does, but there is more than meets the eye. We're talking about dividends, preferred stock, and a whole lot of financial maneuvering. Get ready, because we're about to decode this corporate puzzle together. This document is called an 8K. It's basically a corporate breaking news report filed with the SEC, the Securities and Exchange Commission. Companies use these to announce major events that could be important to investors. In this case, it's all about a dividend, which is like a payment on some special stock. Let's get into what they just announced. Back in 2019, CommScope sold a bunch of Series A preferred stock to a company called Carlyle. Think of preferred stock as a mix between regular stock and a bond. It often pays a set dividend, kind of like interest on a loan, and it sometimes has special rights. In this case, Carlyle bought 1 million shares of this preferred stock. Up until the end of last year, CommScope paid out dividends or earnings distributions by issuing more shares of this preferred stock. This is called a dividend in kind instead of paying cash. They gave Carlyle more stock. Specifically, they paid out 287,328 shares of Series A preferred stock. Now here's the key part. On March 11th of this year, the company's board of directors said they'd pay another dividend on this Series A preferred stock, again in kind. This time they're giving out 16.5 shares of Series A preferred stock. Plus a little bit of cash is being given out because if the math is not a round number, a tiny bit of cash makes up for those fractions. The dividend will be paid at the end of March. There's a small legal detail. CommScope believes they don't have to register this dividend with the SEC. They're using something called Section 4W2 of the Securities Act, which basically says you don't have to register a stock offering if it's a private placement to accredited investor, meaning they meet certain wealth or income requirements, and the company is confirming that Carlyle bought the stock for investment, not to resell it to the public. So now, what does all of this actually mean? Well, it tells us a few things about CommScope. First, they're still dealing with the consequences of that 2019 investment from Carlyle. It was a big deal, $1 billion worth, and these preferred stock dividends are part of the agreement. Second, paying dividends in stock instead of cash can be a mixed bag. It saves CommScope cash in the short term, which could be helpful if they're facing financial challenges. However, it also dilutes the value of the existing preferred stock because there are more shares outstanding. Third, the fact that they're relying on this Section 14 to exemption suggests that they're keeping this preferred stock private. It's not being traded on the public market. Is this good or bad for CommScope? It's hard to say for sure without digging deeper into their financials, but here's my take. CommScope is likely managing its cash flow carefully. Paying dividends in stock lets them conserve cash, which could be a sign that they're facing some financial pressures. It's also possible that Carlyle prefers to receive the dividend as stock and increase their ownership. However, this also creates a few risks. More preferred stock outstanding means higher dividend obligations in the future, and if CommScope ever wants to get rid of this preferred stock, it will likely cost them a lot of money to buy it back. Overall, this 8K gives us a small peek into CommScope's financial strategy. They're making some interesting choices to manage their cash and keep Carlyle happy. Keep an eye on their future filings to see how this story unfolds. CommScope is a well-established player in the communications infrastructure space, but they've faced challenges in recent years, including debt from acquisitions and changing market conditions. This preferred stock arrangement with Carlyle is one piece of their overall financial puzzle. This is probably to make sure that in the short term, they don't end up in a situation where they don't have enough cash. Thanks for watching Corporate Decoder. If you found this breakdown helpful, please like and subscribe. And let me know in the comments what corporate filings you want me to decode next.